Good day, everyone, and welcome to the Quarter 4 and Fiscal Year 2026 earnings call for Ratnavir Precision Engineering Limited. Thank you for joining us today. This call will cover the company's operational and financial performance for the quarter and the year, followed by an update on strategic priorities going forward. Please note that certain statements made during this call may be forward looking in nature based on management's current expectations and assumptions. These statements are subject to risk and uncertainties that could cause actual results to differ. The participants are advised to exercise due caution and not place undue reliance on such statements. This call is being recorded for reference purposes. Representing Ratnavir Precision, we have with us on call today Mr. Vijay Sangvi, Managing Director, Mr. Ajay Panchal, General Manager Finance, and Ms. Swati, Finance Analyst. I now invite the management team to share their opening remarks. We will subsequently open the floor for the Q&A session. Thank you and over to you.
Thank you so much, FinPortal and the entire team of FinPortal to connect us for this wonderful session and the conference call and the earning calls. So I welcome you all on behalf of the Ratnavir Precision Engineering Limited for the quarter four and the year financial highlights on this call. Thank you. Meanwhile, I can be just address you about the company's uh, activities in a very short highlight for the next 3 to 4 minutes, so you all can be listen and understand the company well. So I can be just describe you. So the company Ratnavir will be established in 2002, and it's having a, a fantastic 25 years passed through this journey. So the Ratnavir will be mainly engaged into the stainless steel washers in early stage, and we have been started with the washer of the journey. We are the largest producers in a country for the stainless steel washers. Number of SKUs, we have a largest number of SKUs in a country for the washers, and also there is a backward and forward integrations would be in place. So the company is a fully integrated company. The washer would be application for the any kind of the fasteners. So any kind of the fasteners like nut and bolt, without the washer is any fastening solution will be incomplete. So it playing a very vital and precision role into the any application for the fastening solutions will be there. So company having almost 900 people, 2000 people working in a company having a five different of locations. Company also been having a two-star export house. Company is getting the 15 years consecutively many awards, recognition, highest export trophies into their basket for consecutively last 15 years. And also the all the certifications, process certifications, product certifications, and required QMS and ISO certified, as well as 9,000 certified, as well as to the 14,000 and 18,000 certified company. So whatever the certificates required for the process and certification for the product qualification, that will be in place. Company having four kind of the different products in line. The fasteners business carries the nut, bolt, and washers. Washers are also having the spring washers, belly washers, lock washers, and circlip, which all are the very high value-added items into the line of the products. Equally, that company having the sheet metal components for the solar roofing component, as well as to the automobile components as well for the tailor-made product. Company having a product line of stainless steel finishing line sheets, as well as company having the tubes and pipes. Company have a backward integration process for melting division and rolling division for making the coils and the sheets and the patas and the flat products for their own captive consumption, as well as to the outsider sales. Equally, that's we have been application of this industry would be for the railways, long transportation, high-speed trains, bullet trains, as well as the marine industry, defense industry, aerospace, pharmaceuticals, and ABC sectors, chemical engineering department, dairy product. And so all the engineering products are being covered up by the companies, and we have been serving to the 31 countries globally, plus local distributors, OEM, and the large and the small distributors are being covered up. So company having a very strong presence in last 25 years in all the products very strongly, and varieties of the different of the scales company has been growing together. Last 3 years, company has been also growing with the CAGR growth of the 25% plus, nearby to the 25% plus in top line, EBITDA, and PAT as well. Company has been showing fantastic and tremendous results for the consistency maintaining into the line. Company has also been a greenfield project can be established in a capex 1, capex 2, and capex 2A, which is going on. So, a company having a greenfield capital expenditure and growth committed for the growth into the coming years as well. Equally, that's company is also looking forward for the next vision for the company for the in a couple of years to reach to the same consistency maintained into the EBITDA, PAT line, and top line. Also, company is looking forward for the greenfield and brownfield projects over there. Also, company has been looking forward for the inorganic growth to the maintaining the growth structure for the companies in coming years together. So we have been working on to the same for the line of the growth, and company would be over there. Thank you so much.
Thank you so much, sir. We will now begin the question and answer session. I request the participants to please use the raise hand feature to ask the question. To ensure that we are able to address as many queries as possible within the next 50 minutes, we request participants to limit themselves to two questions and refrain from asking the repetitive question that the previous participant has already asked. Uh, we'll take the first question from Mr. Manan Shah.
Hi, sir. Am I audible?
Yes.
Okay. So my first question is, can you throw some more light on your CCL project? Like, who are your technology partner? If you could share the name and our BIS certification, which was due in July 26. You throw some light on that.
Okay. Manan, thank you so much and good afternoon to all. About the CCL product, it would be a very emerging and very excitement in myself as well as to my team to say about the CCL because it's a CCL is a product which is a copper clad laminates. Copper clad laminates would be an application for the all kind of the PCB industries. So all kind of the PCB industry, this is a basic raw material for the any kind of the PCB industries and the chip manufacturing. So we have been a tie-up with the Chinese company for the technological partner and till up to the installation, commissioning, and quality of the product should be coming out. So we have already been placed the order for the machine, and already the second round of the inspection has also been done. Progress of the site, the civil work is going on, and the the civil and PB work is already been full swing going on. Equally, that's this business will be a substitute to the 100% imports. Right now, all the copper clad laminates would be imports, and we have been one of the first company over there who can be established this manufacturing facility in India first time. So, might be that our project deadline will be coming up for the November 26th to start the production, and we look forward that this monsoon season would be normal and we could be commence this production very easily and smoothly and be coming out within November 26th. Equally, this would be a huge demand is available into the current of the market. Once upon a time, we have been also getting the approval from government of India for this kind of the product in a first time to the company Ratnavir, and we could be established such kind of the copper plate laminates like 5 lines over there. First, we have been installed the first line up to November, and remaining balance line. Once upon a succession of the first line, we could be deciding and planning out for the remaining balance project over there. Total, we are getting the 338 crores of the approval from the ECMS scheme of Central Government of India, as well as there is a GEP scheme for the Gujarat government policy also been there. So it would be a very well protected with the government incentives and the subsidy scheme as well. Equally, there is a there is an the import substitutes can be done. So it can be a dependency of the PCB manufacturers from the for the raw material to imports. That dependency can be reduced, and we can be also been a part for a country for the foreign exchange for foreign exchange earnings for the country as well, and to save the foreign exchange for the country. Equally, there is a strong technological partner who having already experience to establish the copper clad laminates plants globally, and they are been with us for the turnkey solutions for entire this project. We have already visited and the plant for the CCL in outside India as well, and we visited the three times to China with them also, and we have a core agreement between the both the companies to establish the production, establish the machine, erection, commissioning, the formulas, and the epoxy, and all the fully automated state of modern art plant would be established here, and we can maintain the apple to apple quality of the international. So this is what the we have been going, and we have been very much aggressive onto this. Thank you so much.
Okay, sir. And my second question is, we had issued warrants at 196 rupees, which were due to be converted in this month or next month. So, are we going to convert them to equity or we're going to forfeit them?
No, no, no. That's Manan, you have a slightly the wrong news. We have a warrants for the rate of the 159, and we have already paid for the 25%, and partially we have been already paid up, and that can be converted for the equities. And remaining, there is a period of 18 months would be there. So it would be the time period would be over by next September 27. So till time we have a time to balance to conversion for this. Thank you.
Okay, thank you so much.
Thank you. We have the next question from Mr. Sanjay Shah.
Yeah, thanks for opportunity, Vijayji. So my question was regarding the, hope I'm audible, sir.
Yes, sir.
Yeah, so my question was more on understanding the rationale of going into this business, because we don't have any expertise, and what is the technical tie-up terms and conditions, and how do you see that we appreciate the demand side, what you explained, but how about the competition which we face from other Chinese countries and Korean, from where we are usually importing, and government, I suppose, have some anti-dumping duty also.
Are you speak about the stainless business with current, or are you speaking
CCL,
about the copper
new,
clad laminates?
yeah, new.
CCL. Okay. Good afternoon, Sanjay bhai. I would be very happy to share you the such news. There is a no any anti-dumping duty on the imports right now. The number two, the we are being competitive of more than 10% to 13% to the imports. Number three, the all the PCB manufacturers who have been importing raw materials, they have a commercially, technically, and the administratively advantage to buy from the indigenous product always. There is a logistic cost, there is a inventory management cost, there is a lead time of the procurement, the open foreign exchange risk, as well as the apple to apple product if they can get into the correct deliveries, good qualities, and equally matching pricing, then definitely they can be buy from the local itself. Also, there is a government back support for all the indigenous buyers. They will get the 2% of cash subsidy also if they can buy from the local manufacturers. So we have been make a comparison ourselves into the all kind of the technical commercially viabilities, and we have been very much sure and confident that our output of the production cost can be easily beat to the Chinese products as well, in terms of the quality, in terms of the production, as well as in terms of the commercial viability as well. So we are at this moment we have been very much confident on incoming project for the viable in all kind of the products. And equally, the technology would be a apple to apple grade. It would be automized production, and the number of lines can be automatically covered. And lot of things which we have been doing into this line that can be save up the cost, and we could be a competitive. Thank you.
Sir, any technology side, what are the terms and conditions? Are we paying any royalty to them, or how that will work out?
No, dear. Sanjay, there is no royalty would be there, but yes, we have an internal agreement that we have been buying the machine from them, so they can be make the complete solution of the entire CCL line to send it. Number two, to send the people to train our people here. Number three, they can be install, commissioning, and take up the entire responsibilities of the quality of the output of the product. And they also can help us into the set up the SOP systems and the system administrative for the plant is required. And number five, they can be give the back support to the company for the 1.5 years to 2 years, and till up to the product quality of the customers can be accepted, and any kind of the resolutions of the quality product and the acceptance of the customers, they have been bounded to solve this. And it could be a fully automized, and they have enough and enriched experience to supply such kind of the project globally. So they have been very confident, and equally that we also have our own team who having a sufficient and enriched experience about this product. So this has also been backbone for our team to support them. And so we don't have to be paid the royalty, but it all would be covered under the project cost. So this is an the opportunity for them also, that they have been coming up into the India, and India will be emerging market. So they definitely give the good service. We have been with them last 1.5 years, and we signed the agreement in December, and our machines are in under the progress.
They are
Thank you.
Chinese machinery, right?
Yes.
Okay. So my next question was regarding our guidance of 2,500 crore top line, where 750 will be from CCL. That is in next
Yeah.
2 and 3 years. Can you highlight upon the rationale
Sure.
of optimism?
Sure. So we have done 1075, 1078 in last year. This year, our target line would be at 1350, and we could be working towards this. So stainless business and existing business will be growing with the 25% CAGR, and in next 3 years, over the 3 years of the time, we can reach to the 1800 crores from the current business line. And equally, there is if and parallelly that CCL business can be established in the next 2 years, that can be give the 750 crores as a top line. So altogether in a consolidatedly, the 1817 to 1800 crores plus 750, that can be reached to 2500 crores of the top line. That roadmap has been very much cleared, and very clarity we have in our plans. And we have been working with the current business. Capital expenditure is also going on, so that can be help us to reach to the 1100 crores. Say, for example, the estimated 1100 crores to reach to the 1800 crores. And CCL project can be all 5 lines together with the capacity of 69% utilization. We can be reached to the 750 crores of the top line.
Thank you, sir. I'll come in queue for further questions. Thank you very much, sir.
Thank you, sir.
Thank you, Sanjay ji. Thank you.
We'll take the next question from Harsh Shah.
Hi, good afternoon, sir. So my first question is on the stainless steel business. Just wanted to understand the industry a little bit better. Which are the industries that we serve to? Which would be the top five industries that would, form the part of our revenue? And the products that which we sell, the hooks and washers. Are these products procured by all the fastener manufacturers from third party like you, or they also do backward integration into it? So if you can explain this industry dynamic.
Sure. First, it's a very good questions about the current business overall. I have already explained in our brief that we can be serving to the automobile industry, to the large transportation, small transportation, high-speed trains, aerospace bullet trains are mainly for the fastest product. oil and gas, sugar, dairy products, and pharmaceuticals for the tubes and pipes. First, there would be roofing components over there, and for the finishing line, we can be supplied to the dairy products as well as to the weighing scale or architecture, building construction, as well as to the elevator industries, and as well as to the all FMCG companies where this home appliances, kitchen appliances are being produced. So these are the industries where there is a serving over there, and equally there is a dynamics of the business would be into the stainless steel that we have been serving to such kind of the industries last 25 years plus, and we having a sound and very strong and presence into the local as well as to the global market as well. And we have been growing with 20-25% of CAGR and maintaining and consistently growing into this line. So we have strongest order book positions also over there, and equally that's a strong customer network through distribution network, as well as to the partially with the OEMs and partially with the small and large distribution and the corporates to whom we have been serving. And for the tubes and pipes and for other sheet metal products, we are also been trying to get the approvals from the PED, QIR, Lloyds, EIL, and all the companies. So that is all would be into the place, and gradually, we have been entering into the last end users to the product. So this is how the company has been growing and the shipping out.
Okay. I mean, if we have to look at top five industries, how much would that contribute to your revenue? Or are you saying that it is very, very fragmented and you cater to a lot of industries that
Yeah,
one or two industries doesn't make a difference?
yes, but Harsh, it could be differentiately for the all the product range would be there. For example, into the washers, there is a top five customers would be from the exports and the domestic as well. So this can be a contributed 2%, 3%, 5% nearby to this. For the finishing line business, there is and the top customers who are been into the 10, 12% over there, and might be would be 4, 5%, 3% of the sales of the revenue. Equally into the sheet metal products and the tubes and pipes, there would be a 5%, 10%, or 8% kind of the products over there. So there is a totally different product lines we have, and the different product customer wise sales over been there. So that can be a differentiately partially that can be a sharing out. So my main is there is no any single customers over there who are been catering to the all the parts, but yes, there is and the 5% to 10% of the sales revenue over there.
And sir, one question on your cash flow. This year we had
Yes.
negative OCF of around 50 crore and we have done capex of 115 crore. So if you can explain on this part, I mean, why are we not consistent in terms of generating operating cash flow? One year it's negative, one year it's positive. So when can we expect the OCF to be consistently positive? And on what we have incurred this capex of 115 crores?
Okay. Harsh, I think this Swati would be available and Swati can be answer you about the on the cash flows. I think you have some misunderstanding onto the cash flow, but Swati, can you answer for this, please?
Yeah, actually, our operating cash flows are already in place in the already financials in available. However, the current year's net cash flow, which is of 203 CR, this includes the FDs already kept with the banks of from QIP funds. So because of that reason, this is showing. Apart from this, we are also undergoing the two major capexes. Once this capex will be in place and all the working capitals and all will be fully deployed, these operational cash flows will be then stabilized.
No, I mean, the OCF is negative 48 crore. I didn't understand your explanation. If you can, what led to the negative 48
So,
crore of OCF for the year?
48 crores of in which year you are referring for?
FY 26. If I look at your cash flow statement, the result filing that you have uploaded on the standalone cash flow front, you can see net cash from operating activities is 484 million negative.
Harsh, so you can drop this question in the Q&A tab and we can take it later on.
Yeah,
Let's
yeah,
move
it's
on to
fine.
the next
It's
question.
fine. Harsh, we can be just Swati. Can you check the cash flow statement if with you, and we can be express this part. No
Yeah.
question. Yes, please.
Yeah, I will drop this question in the Q&A tab, and we can carry on.
Yes, sir. Thank you so much. We'll take the next question from Mr. Tanmay Zaveri.
Hello, hi sir. Congratulations, sir, to you and your entire team for CCL approval. Uh, Sir, I wanted some clarity on our overall capital allocations and the fundraising roadmaps because I'm getting a little confused. So what I understand is the company earlier had a QIP of 183 crores in December 2025, and now we are planning for another QIP of 330 crores. And in addition to that, there will be promoter infusion of 120 crores to warrant. Is this understanding right?
Yes, sir. I can be just come to the point. Correct. So, Tanmay, can I answer you onto this? Okay. Company has been raised 185 crores of the QIP, which objectives are being given for the working capital of reach to the 800 crores to 1500 crores of the journey of the current business, and the capital expenditure would be made by the company. Capital expenditures already been completed last year for the current business as well. So this can be met the requirement of this working capital, and this is ongoing. Number one. Number two, about the 330 crores of the funds, company has been receiving the 338 crores of the project approval for the capital expenditure, and equally this project cost is a 351 crores plus solar of 46 crore. So total roughly would be at 400 crores to be invested by a company next 250 crores working capital for the CCL project. That can be a total requirement of 650 crores. Out of this, company has been planned right now to be a growing business over there and looking to the project approvals. We have been raising the fund of 330 crores right now through QIP or equivalent right issue or equivalent any kind of the fundraise solutions. So this is and the plan for this to be establish the CCL project as well as to the current stainless steel business working capital as well as to the working capital of the CCL project. So this is how it can be moved. Equally, there is in the warrant issued of the 115 crores by the company. Out of this, 25% would be paid off in the last year itself. So this can be into the flow of the company as well. And remaining would be for the amount where we are company has been doing the first line of CCL that can be used for the same. So this roadmap is very, very clear that out of the 650 crores where the company wants to be reached by 2,500 as a top line. So working capital, capital expenditure, and the company is planning right now for the 330 crores of the fundraise to meet the capital expenditures as well as to the working capital requirements on the basis. Thank you.
Sir, so what will be our cumulative promoter holding post this QIP and warrant conversion?
Sorry,
Sir, I was asking post this QIP of
no,
330 crores and
please,
warrant conversion.
Tanmay, I'm 330 crores and warrant conversion of remaining is a 46 crores.
No, so what will be the promoter holding percentage, sir?
Okay, the promoter holding percentage would be right now after the warrant conversions, it can be reached to the around 47, 48% if the fully warrant conversion can be done. And after this 330 crores of the dilution, it can be reached to the 42, 43% nearby to this.
Okay. Sir, one question was regarding the inorganic growth. We were evaluating a European company for acquisition. So if you could just
So
throw some more colors on this, how have we processed on this, and what kind of company, like what are the core business of that company, and by when do we expect this deal to get closed?
Great. In last call also that we have been acquire a company for the Europeans, that discussions would be ongoing. There is a similar kind of the product of the precision components over there. They have been manufacturing such components over there, and it is mainly for the acquisition of the customer acquisitions are been behind the object of the company, as well as to the fastest growing company over there. And number two, there is a the progress of this company would be we have a commercial understanding between the both the companies would be done, but due diligence and a lot of procedures have been bending to this process, which is partially going on. So it will take almost 10 to 12 months more time to acquire the company into the all the sense, because in the European laws and the Indian laws they have been clearing their all statutory compliances, and the other dues would be into the place. So once upon a time all the due diligence can be completed, we can be plan to move ahead onto this direction. The mainly these components are been serving to the all automobile companies. They have a very good Fortune 500 companies are been into their customer range, and the precision components, similarly components of the washers and stamping product, what we have been manufacturing, similar kind of the and the just on the shape can be changed. The same kind of the products they have been producing. So our idea would be heading to get the immediate entry to the all automobiles and the large corporate client what they have been serving to the 25 years. Plus, they're having a gross margin of 66% and net margin of 3% because of European production cost was too high. So European company can get the huge additional orders over there, and they can be transferred. This strength can be boosted up, and our cost of production can be reduced. So the automatically the viabilities can be coming up. So this is what the idea behind to the commercial viability and the customer acquisition and the global presence would be there. And the such kind of the experience would be help us to growing into the inorganic growth. But still, the process is on, and it will take some times to clear all the compliances. Once upon a time we have been ready, we definitely inform to the all of them timely. Thank
Thank
you.
you, sir. So I have one last
Thank
question on CCL side.
Uh,
Do we have
thank
any contract of pre-order from any PCB companies?
Tanma sir, we have to wait to take this question. We have already taken two questions and we have to get to another participant.
But can I get the question of Tanmay please, because some other questions I can be cover up this also. Tanmay, please repeat the question, please, quick.
So my question was on the CCL side. Do we have any contract or pre-order from any PCB companies in India for a CCL product?
Okay. Okay, Tanmay, it's a very sweet and short answer. We have been approached to all the PCB industries. We get the many of the soft confirmations over there. Many of their availabilities that once upon a time you can be ready. We have been ready to buy it. और शायद एक या दो कंपनी ऐसी है जो हमारी पूरी फर्स्ट लाइन का प्रोडक्शन completely buy कर सकते हैं. So soft confirmations are there. Not any kind of the, we have also not taken any kind of the written confirmation right now because it's too early. But yes, after the 5 lines, we are just serving the 1.8% of the current market. And what is the demand is been available for the CCL and the CCL products, PCB and the chips, it would be fastest growing with the 35 to 40% of CAGR growth. So अभी तक जो आज की डिमांड है उसको हम लोग शायद 2% तक भी सर्व नहीं करेंगे. तो बाकी जो 35-40% से ग्रो हो रही है उसके लिए the market was huge. Market potential was very, 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 very huge, honestly speaking, and the soft confirmations are there, sure. Please continue for the next.
Thank you, sir. We'll take the next question from Mr. Darshan.
Hello. Good evening, sir. Thank you so much for letting me allow a question. Firstly, congratulations on a great set of results. That's a really good PPT which lays out a lot of stuff, sir. So just one question, sir. From CCPL, CCL, we are thinking of a 15% PAT. And for FY27 also, we mentioned a 9% PAT. Then, sir, 3 years PAT guidance wise, it's 9%. A PAT should improve, right? Like, so just wanted to understand either our FY 27 PAT 9% is a bit difficult, or 3 years down later on, our PAT should be higher than 9%.
Darshil, good afternoon. I understand your questions. In between, there is a lot of disturbance, but what I understood, the consolidated profit and the individual profit, yes, the individual CCL is working with the 13% of the PAT for the first line. Over the 5 lines, yes, we can be maintain this PAT line with the 13% and EBITDA with the 21%. In consolidatedly, the both the stainless steel business and the CCL business together, we can be cover up 2,500 crore top line is estimated and the projected, uh, uh, plus the 13.5% as the EBITDA margins and the consolidatedly 10.5% or 9.7%, that would be a nearby to the PAT margin for the consolidatedly both the facilities can be covered up. So this is how it can be presented. I hope I have been answered you.
Yeah, fair enough, sir. I just wanted to
Yes.
understand, like, with for our current guidance, like from our existing business, we are saying around, 30% growth. So due to the war situation, do you feel that, that can be, short term some decline? How will our Q1 or H1 be like? Because the situation is a bit fluid right now, right? Are you impacted? So how do you see in terms of H1, H2, right?
That's the war has been last 45, 60 days is going on. Uh, Honestly, our company and our products are not been much affected with any kind of the war situations right now, and still I am not looking any kind of the declines into the next coming months. Also, we have a good order book positions. Only the affected areas would be this: oil and gas prices are been increasing. So whatever we have been using the consumables like dye tools and the oil gas directly, fuels, that price can be shoot up, but this price can be shoot up, and this is for the everyone. So we have been passing this cost to the adding into the cost and passing to the customers. Equally, there is in the freight cost that also can be slightly affected, which can be increased, and that is also can be passed on. So the demand was there. Demand was equally available, and in spite of this, the metal prices have been increasing very rapidly. So better. So we feel that there is a no declination right now. In spite of this, we see that the pricing and the business have been growing. But yes, the processing consumables cost have been improving. But this can be passed to the customers, and obviously this is for the everyone. So the it cannot be affect to the any of the single company. So with this war, any kind of the decline situation for first quarter or second quarter, we not seen much more any effects over there. Thank you.
Oh, okay, got it. So, sir, like, so quarter on quarter, there'll be growth, right? Like what we are saying, 30%. So we can see that, like last year's June quarter, we can see 30% increase, or will it be more fag-ended, like when the, CCL comes in, right? How do you, sir, see that, sir? Our existing business growth will be linear only, right, sir?
So we always been saying that 25% growth and CAGR growth will be continuously maintained by the company last 14 to 16 quarters. If you can be compare year on year or quarter to quarter or the next quarter to one quarter. So there is not an much more gap over there. We are been still confident about our orders and situations. Looking to our business plans, we have been still confident to be maintain the same. Number three, that's the some of the capex is going on. If some of the capex would be slightly prolonged, then it could be affected for one quarter to another quarter. That's it. Nothing else would be a part of this. This can be affected, but it can be maintained in between of 25% CAGR growth. That can be surely maintained.
Okay, fair enough. And just last question from my answer. Like a bookkeeping question, sir, what is our tax rate? Like it's a bit fluctuating, right? Like, so current, what is our effective tax rate? I think in FY 26 was around 15%. So what can we expect, sir?
Your voice is not audible.
Voice is
Hi,
not audible.
yeah, I was saying our
Your,
tax
your
rate.
voice is not audible.
Can you hear me, sir, right now? Hello?
Can you come
Hello?
again?
Network bandwidth
I
is
was
very
saying
low.
our tax rate in FY26 was 15%. What can be the
No,
effective tax rate going
no,
forward?
yes.
Yes, good question.
I'm not audible you very clear, please. In between of this, it will be breakthrough. Can you repeat again, please?
Hi, sir, what is our effective tax rate going forward, sir?
Tax rate.
Yeah,
20.
it was 15%
Okay,
in
it could be
FY26.
we could not be anticipate to the tax rate right now, but it can be depending on to the situations of the depreciation and all the other things can be calculated. But normally in the growing scenario of 30%, equally the capital expenditures are also been done. So how much of the percentage can be running out? But yes, I could be say you that the 13% to 15% can be a tax rate, can be going on into the similar scenario because we have a capital expenditure over there. Also, we have been a solar capex where the 40% of the depreciation will be considered. So slightly, I could not be overcome it right now to you, but yes, 15%, 14, 13, 15% of the range can be over there.
Okay, okay, fair enough, fair enough. So I have more questions. I'll get back in the queue. Thank you.
Thank you, sir. We'll take the next
Perfect.
question from Mr. Jignesh.
Yeah. Sir, am I audible?
Yes,
Yes, Jignesh, you are
very
audible.
much.
Yeah. So, sir, as you mentioned that consolidated EBITDA would be around 13%. So, since we are being the first in this CCL product, so sir, wouldn't it be wise to assume that our EBITDA initially for 2, 3 years can be much higher, since a lot of people will shift to indigenous products?
Business, it would be on aggressive side. Your answer would be yes, but I can just tell you that the EBITDA would be maintaining with the 20% for the first line, what we have been projected for individual CCL business. Okay, individual CCL business would be running with the 20% of EBITDA and 13% of the PAT. But when we consolidated the both stainless steel business, which is in the 9%, 10%, 10.5% EBITDA and 20% EBITDA, that consolidatedly coming down to the 13% or 14% of EBITDA on a conservative side. So at this moment, this is a new business line that is, and the establishment is going on. So once upon a time, we are being also giving the conservative numbers right now. Why? Because this is in the new line of the business. How we are being commenced successfully. If it is would be 1 or 2 months here and there, or product can be established in a slightly higher. That's why we can be calculate the safer margin and the risk calculations on site. That's why it could be a
Okay.
conservative numbers right now. So, but honestly, the individual CCL business will be carrying with 20% EBITDA and 13% PAT. So you can be considered like this way if you compare to the CCL product.
Okay. Sir, other question, we see the current year's balance sheet. The last year's trade receivables was 65 crores. Now, over last 1 year, there hasn't been much improvement in the total overall business, but the receivables have increased to around 110 crores to 175 crores. So, what is the main factors behind this?
Yes, yes. The business is carrying out into the, you can see the in the last 3 years, company's top line is from 419 crores to 100 1078 crores. It could be a growing with the three times multifold Okay, so there is a credit the receivables or the data sides you can we have been increasing the more data, more customer networking, more end user to be serving, and we have to give them a credit period or we have to give them a testimonial. We have been launching the new product. We are launching the nut bolts in the last 2 year 1.5 years ago. We have been adding up the new SKUs. We have been adding up the circlips, washers, clip, block washers, belly, all the new product range would be there. That's why the testimonial period, launching period, and the slightly moving up. So the creditors and the receivable cycles have been increasing, but it can be into the control time. But equally that if you can be compare the inventory cycle time, that can be also reduced. So this is how the intermediate would be connected together.
So it would normalize in next year or so, since your new
Yes,
business
yes, yes,
would improve.
definitely. That's as
Because
soon
in
as we
last
can
one
be.
year, your revenue has just grown 100 crores, but your debtors has grown more 100 around from 65 to 175,
I, I,
100 crores.
I fully understand. I fully understand that data periods. Yeah, once upon a time, how your product would be entering into the market, and we have to give them a liberty to launching out, to give them a end users product. So we have to be work with the market scenario and situations, and equally that you can see the inventory period would be also effectively improving. So this is once upon a time the new product range that can be a reason, and once upon a time it can be settling down, it can be automatically coming down into the ratio of the industry.
Okay. Yeah. So last this 330 crore capex, when are this capital raise, when we are planning to complete
Capital raise.
this 330 crores, that fundraising that we are
Okay,
doing?
330 crore. At this moment, we have a plan to complete by September, looking to the geographical conditions, looking to the interest of the investors, and looking to the meeting with the investors as fast as possible. We can be cover up. That is always idea for the any kind of the promoter or the fundraise. But looking to the geographical conditions, also we have to be walk through, make the sure ourselves, and try our level best to conclude as soon as possible.
Right. Okay. Thank you.
Thank you, sir. We'll take the next question from Mr. Samarth Gupta.
Good evening, sir. Good evening, sir.
Yeah. Good evening, Samarth ji. कैसे हैं? Yeah. Good evening, Samarth ji. कैसे हैं? Siddhi, we cannot hear it.
Sir, am I audible
Yes, now it's very
now?
clear.
Sir, my question is related to our new CCL business that we are planning to foray into. So, sir, are we planning to manufacture a high-spec, top-tier CCL that is used in GPUs, semiconductors, or is it the general purpose serving
No. It
CCL?
could be this CCL line would be world's top CCL line of the production. Is a modern art facilities are been we have been doing. जो भी दुनिया में प्लांट लगे हुए हैं उसके इक्विवेलेंट में प्लांट है, इसमें कोई भी कॉम्प्रोमाइज नहीं है. दैट इज द फर्स्ट पॉइंट which can be produced the all the CCL for double side, one side, from starting range of TG value to 110 to 180 TG value we have been doing. So it can be application for the semicon chips as well as to the mobile, and all the critical electronic appliances would be covered up for like of the defense or the for the any kind of the Airbus industries. Every PCB industries can be covered up for CCL product line.
Sir, so just a follow-up question on this. So PCB manufacturers over globally are pointing out high shortage concerns amid high demand from AI industry, semiconductors, and data centers. So also hearing some news about demand in Korea having gone up by 5x on a monthly basis, and even China is unable to cater to such demand constraints. So is our understanding correct? And I don't think will be an issue for company to reach full capacity utilization during the commencement.
No. If there is a huge demand, that is your understanding was very, very correct. The internationally and the globally demand was very, very high. At this moment, after the 338 crore of the capex of the 5 line install, we just cover up the 2% of market share for the current demand for India market, not global market. Chips and the PCB industry with growing with the 30-35%. So if we can be compared to this could be a what we are producing is a nothing. So there is no any scope for this to be a demand would be an issue. Important, we have to be a correct quality, correct execution of the project, and the quality of the resin and the glue and the entire copper foil and the fiberglass would be a perfectly used. Once upon a time, our product quality was approved. It could be very easy to sell, honestly, because there is a first mover advantage. Number two, it could be the plant would be very effectively used. And number three, the global demand was very, very huge. And the incoming years of next 20 years is for the electronic and the digital world. And we all know about that, how fast is the semiconductor industries, how fast is the data center, how fast is the PCB industries are being growing, and we have been looking. So this is what the entirely the government of India and the Ministry of Electronics are been very worrying, that you all people are been putting the 10x capacity and growing with this, because demand was huge and the supplies have been very less.
Thank you so much, sir. Just last question, I wanted to check the commercialization timelines for this facility.
Yeah, the commercialization, the facilities would be July, August, September, October would be a commencement of this project of the machine. November, October would be a trial run, and November 26 would be a production, first production coming out. That is the timeline and deadline. It all depend upon the monsoon, how it affects to the execution work. Otherwise, the November 26 would be okay. But maximum by 1 or 2 months here and there, we can be complete the project. Machineries inspection of the second line would be done, and it could be leave to the China by July first week. So we have been very aggressive that in July end or August we have been receiving the machine, and they need the 60 days time to the execution.
Thank you so much, sir. All the best.
Thank you, sir. We'll take the
Thank
next question
Thank you.
from Mr.
Thank you,
Jay.
Samar.
Namaste, Vijay bhai. I am Jay from Vadodara. I have only one question. Could you please share the capex splits for CCL project, like how much for machines, how much for land, and how much for civil and construction work?
Jay, thank you so much. You are the local guy for us, but I can just tell you that the 70% would be contributed for the equipment, plant, and machinery, which is a turnkey solutions. 80% would be covered up for the building, and the 12% would be for the miscellaneous and the filling and the cost. And land is already been with the company, so it cannot be calculated right now. But yes, these are the breakup for the plant machineries, building, and the auxiliaries for the equipments.
Okay, thank you, sir, and all the best for bright future.
Thank you, Jay. Thank you so much.
Thank you, sir. We'll take the next question from Mr. Vineet.
Hello, sir. Good evening. Sir, my
Good
question
evening,
is again with respect to the CCL.
Yes.
I want to first of all understand more about the CCL. Like you said, even after having the 5 lines in India, you will be just catering to like a low single digit percentage of the entire demand in India, right? I want to understand why any player in India has not like come in this space in the past, and Next, I also want to understand about the capex plan that we have, right? Like for the all the five lines, if you can mention the timeline. Yes.
Okay, Vinit, good afternoon, good evening as well. So, why other players are not there? It's not been honestly our lookout. But yes, I can just tell you that everyone would be heading to the CCL and the new product developments always been there. Electronic, semiconductor, and digital time would be there. And India would be emerging and the very actively and progressively under the leadership of Mr. Narendra Modi and the entire team of Ashwini Kumar Vaishnav and all the Ministry of Electronics are working behind it very sincerely to establish the all the electronic sectors over there because they all are visualized and very much seen that how much next 30 years or the 40 years to changing the world with the semiconductors, EV vehicles, PCB, electronics, and conversion to the next new era of the digital world. So the demand was there. Everyone, every entrepreneurs like us also looking forward to invest into the such kind of the industries where the players are not there. First mover advantage would be there if we can be tie up with the good machine manufacturers and the collaborations to then for the technology partners. So we can be definitely succeed. And India is an emerging market. India will be growing with the huge potential market into this area as well. All the foreign clientele are been coming up and investing into the India for the electronics like the Micron, the Tata, and the Keynes, Dixon here who have been investing into these lines because they have been seeing the very emerging market over there. So we are also looking forward to this. We find out the product, we evaluate it in all the SWOT analysis, and we come up and we take our calculative decisions that we can be moved into this area where we are being first comers, where there the product can be covered up with the capital incentives as well. So risk of commerciality can be covered up. Equally, the technology partner also been there, and the good team to hand over this project are been also available. Looking to all this scenario, we have been coming up, but equally there is a many more other peoples who have been working onto this line as well. But at this moment, the how much is the demand? Indigenous manufacturers are not there. That is a fact. And looking to all this scenario and opportunity, we grab it and calculatively risk taken and hope this calculations will be going in very smooth way and we get the advantage and our stakeholders and our investors as well get the advantage for this. Thank you.
Thank you so much, sir, for the explanation. And if you can like take the second part, where please explain the brief timeline of all the five lines that we are coming up with in the CCL, and also to mention that one of the reports of our IR mentions about
Okay, okay.
500
I am
crores
sorry,
type of
Vinit. I
revenue. Hello.
forget your second
Yeah, I was saying that
questions
one
to
of the
answer, but yes, yeah, this first line.
sorry, sir, you can continue.
Okay. Vinit, that's our timeline for this first line, what succession, 2 years, all the four lines together. Either we can be install the two lines in the next year and two for the first and the system establishment and the response of the customers depending on to them. Uh, Very next years we can be establish the two lines or we can be session plan, but in a place.
Sorry, sir, I couldn't hear you because of the network issues.
Vijay sir, I would request that you turn off your camera. I think there is some network issue at your end. So if you can turn off the camera.
From my end?
Yes, there is some network issue. Your voice is breaking. Maybe.
Oh my.
Sir, if you can answer the last
Now I'm
question
audible?
again. Yes, sir, you're audible.
Okay, I just told that for the first line of the timeline of November 26 would be commence and get the production out. Depending on to the succession of the first line in terms of the quality of machines, process, and quality of product output and the response of the customers. We decided to be remaining four lines altogether, or we can be split out the two lines of each year. So maximum over the 2 years of 2 years of the time, we can install all the four or five lines together.
Got it, sir. And the 750 crores of revenue guidance that you have given for the CCL in FY28 is combining all these five lines, right?
Yes. Exactly.
So, I mean, how will you be like ramping up the other lines in FY28 then if you are coming up in that year itself?
No, that's the if we can install the four lines all together, okay. This is at the
Okay.
capacity of 68% is a calculation of 68% utilization. So our first line and all the four lines would be established into the next year. So in 28 we can be definitely give the full utilization of this plant. So the 750 crores would be a definitely achievable figure.
Okay, and sir, given the demand side, are we anticipating like close to 90% types of capacity utilization in the second half for the first line that we will be coming up with?
Normally, yeah, normally the in any kind of the process industry, the utilization would be nearby to 80-85% would be a excellent utilization. So I can just tell you that yes, 80-85% we can be definitely reach by 28 for the sure. At this moment, very conservative side, we have calculated the 69% utilization and revenue would be calculated according to the 69%. But if we can be reached to the 80%, it can be increase the revenue. This figure would be a conservative side because of the new line and all the other parameters of the safer side that can be calculated. If we can get the 80-85% utilization, the numbers have been improving too much.
Got it, sir. Sir, once again, all the best for the new venture that you are coming up in. I have more questions on CCL, but maybe we can connect later offline after this call as well.
Sure, Vinit. You have been always been most welcome and pleasure to hearing you. And thank you so much for your kind words.
Yes, sir. Thank you so much, sir.
Thank you so much, sir. We'll take the next question from Mr. Ankur Gulati.
सर दो क्वेश्चन आपके सीसीएल की लाइन के लिए डेट लिमिट साइन हो गए और सेकंड आप बोल रहे हैं कि अगर अगस्त में लाइंस यहाँ पे आ जाएंगी तो आप लोगों ने एडवांस पे कर दिया चाइनीज वेंडर्स को
Ankur ji, thank you so much and nice to hear you again. For the CCL line, we already paid the advance in January. We have paid the second tranche of the payment also been into the process right now because inspection of machine last month we already done. We have been expecting the line by July end or August from here in India as well because the machine manufacturing work is going very smooth and as per the plan and the time bar chart given. And our timeline for the August, September, October would be a commencement of installation of the machines. This also been online at this moment for the civil work as well as to the PB work is also online. Only and only the how the monsoon can be affect for the some days that can be just we have to be wait and watch for this. Otherwise, all the things have been online and. As per this timeline chart, November would be an ideal time for the production and we can be come out for this.
और सर ये पीएलआई बेनिफिट केपेक्स करने पे लिंक्ड है या प्रोडक्शन रेवेन्यू स्टार्ट होने के बाद आपको मिलेगा
अंकुर जी द PLI benefits जो है वो as soon as we can be complete the capex we have submitted the relevant documents whatever the required in a list of the form we have been submitted And normally their timeline would be for the 90 days after the erection and commissioning of the product and the first invoice to be prepared. But from the government work, we can be calculate that 90 days might be a 150 days or 180 days can be disbursed.
So, Vijay bhai, what I'm trying to understand is 380 crores capex or whatever it is, right? Your PLI benefits will come to you when you have started revenue from this project. On
No, no, no.
finishing, okay, please, if
नो
you can
अंकुर
help
जी,
me.
जैसे जैसे हम लोग 70 करोड़ का पहला कैपेक्स कर रहे हैं, जैसा कैपेक्स पूरा हो जाता है, हमारा एक फर्स्ट इनवॉइस जो भी है वो बन जाता है। उसके बाद हम लोग को इमीडिएटली सबमिशन रखना है और 70 करोड़ का जो भी कैपिटल पीएलआई का एडवांटेज होगा वो हमें डिसबर्स होगा। इस तरीके से पार्शियली पार्शियली जैसे जैसे लाइन कंप्लीट होती जाएगी वैसे वैसे हम लोग उसका बेनिफिट ले सकते हैं। हमें पूरी पांचों लाइन इंस्टॉल होगी उसके बाद बेनिफिट मिलेगा वैसा नहीं है।
ठीक है। और ये बेनिफिट है कितना? लेट्स से 70 करोड़ के केपेक्स पे कितना आपको बेनिफिट मिल रहा है?
Cash subsidy benefit would be at 25% from the central government of India and 25% from the state government of India. So it would be at nearby to the 50%.
So 70 crores में से 35 crore is what you will get back.
बिल्कुल सर।
And this 35 crore कितने टाइम पीरियड में अपने पास वापस आ जाएगा? इमीडिएट है
मैंने
या
यही कहा
3
कि
साल का?
as soon as प्रोजेक्ट कंप्लीट करने के
अच्छा।
बाद 6 महीने के अंदर में 3 महीने का उनका टाइमलाइन है, बट
हम्म।
सेफर साइड पर हम लोग 4 से 5 महीना गिन के चलते हैं।
And sir, operational period में is there a subsidy on power cost or anything of that sort या वो कुछ नहीं?
बिल्कुल सर, द गुजरात इलेक्ट्रॉनिक पॉलिसी, द पावर service cost of 15% will be exempted. Number two, there's the logistic cost of all the imports, raw material and import machineries that can be exempted. And the supplier side, the customer side, they will get the 2% of sales value if they can buy from the indigenous suppliers. So a lot of small benefits are also been there for interest benefit and capital interest cost and what छोटे छोटे और भी एक्स्ट्रा एडवांटेजेस है जो कैपिटल सब्सिडरी और कैपिटल इंसेंटिव्स को और डाइल्यूट करने में हेल्प करता है इसमें।
And जो डेट आप ले रहे हैं उस
So,
पे स्टेट या सेंटर का कुछ सब्सिडी?
नहीं सर, ओनली द इंटरेस्ट सब्सिडी है।
What is the interest subsidy, sir, on that?
इंटरेस्ट जो भी हम लोग इंटरेस्ट पे करेंगे वो इंटरेस्ट हमको एग्जम्पशन मिलेगा।
पूरा रिफंड है?
नॉट पूरा, देयर इज अ 2% दे आर बीन चार्जिंग, रिमेनिंग मानो कि 9% अगर इंटरेस्ट रेट है तो 2% वी हैव टू पे एंड 7% कैन बी एग्जेम्प्टेड।
And this is over and above 50% capex वाला जो आपको
Exactly.
sir,
Exactly.
this would be
Okay,
the
thanks.
last question.
Yeah, thanks, Vijay.
Thank you, sir. We'll take the
Please.
next
Thank you,
question.
Ankur ji.
We'll take the last question now from Mr. Anuj.
Yes, please.
Am I audible?
Yes.
Right. So, sir, thank you for taking my question first of all. So, we see a sharp increase in the other income side. So, could you shed some light on that? I assume it's from the cash that was kept in the bank.
Yeah, exactly. So you could be have a very correct answer over that. There would be a cash would be available into the bank for the QIP in the November. That interest could be into the other income, and there is a sum of the portions which can be covered up with the other cost as well. So this is only the other income breakup which has been given up into the balance sheet as well.
So, sir, on a normalized basis, is it fair to say that the bottom line for this quarter would have been around 11 to 12 crores, leaving the exception aside?
No, no, no. That is not a point. That is the income tax guideline that we have to be shown the interest income in a separate side. That is why it can be come. Otherwise, the finance cost can be reduced. So you can say there is a income side is a 17 crores that can be equally there. Otherwise, the finance cost can be reduced. So one side finance cost will be paid, and one side the finance cost will be covered up under the other income. So I think. This could be just only the presentation point.
All right. And sir, another question. In the previous con call, you had guided for a top line of 1,500 crores for financial year 27, and
Exactly.
1,800 crores for financial year 28. Now, why is
Correct.
there a downgrade revision in the financial year 27 top line guidance? Are there
No,
issues on
that
the demand side or on the supply side?
no. We are still on the line of the 1,500 crores. We have just given the number of 1,350 as a part of the 25% of the growing, but we still working on to the 1,500 on the top line. 1,800 would be at the very next year, and consolidatedly we have been covering up the 750 crores from the CCL, so it can be reached to the 2,550. बट वी कैन बी एज्यूमली दैट के 2500 टॉप लाइन तक हमें पहुंचना है तो 1350 to 1400 would be ideal lines which we have been giving up that is already been there and 25% plus जो 27-28% ग्रोथ होता है तो 1500 करोड़ की टॉप लाइन तक पहुंच सकते हैं so there is no any doubt onto this कि हमारा जो 27-28% का ग्रोथ है that can be maintained consistently as I told the previously also.
All right, and sir, last two questions from my side. So, what would be the effective tax rate going forward? Because in the previous quarters, I see that the tax rate has been very, inconsistent. And what's the reason for that? If you could throw some light on that. And my second
So we
question
have
is on the receivable side.
so we have taken
Yeah,
both the questions.
Anuj bhai, that we have taken this both the questions already over there. So if you don't mind, the tax rate would be a maintaining in between of 13 to 15%, what I already answered. And about the receivables, there is a lot of new products, new range, end of the customers. Going through the down the line to the end of the customers, we have give them a credit. Once upon a time, we have been done the capital expenditure over there, and over the period, it can be coming down into the smooth line. So there is a point which already covered under the question of the some of the participants over there in a few minutes before.
All right. All right. Thank you so much. Wishing the
And
management the best.
Swati,
Yes, sir.
if we prepared with the Harsh question of cash flow, then we can be answered it, so it cannot be open.
Yeah, so that's the
Please
reason
answer it.
behind that cash flow is because we are factoring certain figures in this current financial year. That's like we are making payments to advances to our capex suppliers. Apart from this, we are also having depreciation in place. So this is the effect. Once this capitalization will be in place of the fixed assets, so and will start generating the revenues, those cash flows will again got improved.
So basically the question would be this, the cash flows, why the year on year can be changed? It can be a maintaining into the smooth conditions. That is what the question. And we can be say that the cash flows can be maintained regularly onto the board of time. Once upon a time, this capital expenditures entries can be covered up, right?
Yes.
Okay.
Okay, thank you so much, sir. On behalf of FinPortal, I would like to extend our sincere gratitude to the management team of Ratnavir for their time and the detailed responses today. We also thank all the participants for their active engagement and thoughtful questions. I would request Vijay sir to please give closing remarks.
Yes, as far as the Mr. Ajay Panchal is also been there. Ajay, can you give the closing remarks and then I also adding up the closing part over there, please.
Thank you very much, FinPortal team, to conduct a beautiful conversation with the investors. I would like to summarize our financial year 2026 is the purposeful growth and marked by better margins and diversified revenue base and learner cost structure. We are well positioned to build on this momentum a year ahead. Thank you so much.
And lastly, that's I would be extended my grateful and thankful to all the investors who have been supporting us, guiding us, take up that time to come understand the company in a deep and detailed. Lot of interesting questions is coming up and open up the eyes and open up the company's futuristic plan. I can just tell you that we have been into the volume to value growth. The value engineering is our motto. The vision to the company would be into the diversified and the stainless and the electronic business moving ahead. Together, consistent and the maintaining growth would be a company's statement, and we are committed to grow with the balance growing and committedly and consistently, and communication would be a very sharp and very skillful growth would be there. Number three, the last and foremost, that a company's vision for the next 3 years and the 2.5 years would be for the 2,500 as a top line, with the 13% of EBITDA and 10.5% of PAT. With the both the business together of electronics CCL as well as to the stainless business together, and we have been very much firm, committed, and devoted, and our highest integrity would be there to execute this project very smooth execution with the blessings of all the investors, shareholders, directly or indirectly supporting to the company's growth and the management. Thank you so much. Thank you FinPortal to connecting us. Thank you everyone for your participation. Thank you so much.
Thank you so much, sir. Should any queries remain unanswered, please do not hesitate and drop your questions on the email ID given below. Thank you. With this, we conclude today's session. You may now disconnect.